Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mark-eitel.
All right. My name is Mark-eitel, and you are listening to the Mr. Mortgage Show. And friends, you're in the right place if you want the data, the information, the tips, the tricks, the strategies, all the info that you need so you can go out there and make better real estate and mortgage decisions for you and your family. I am joined, as always, by my producer, Jen. She is standing by and womanning the Anytime Hotline. If you've got questions or comments and you want to get them on the air, just call or text 855-462-7292. That's 855-462-7292. That is the Anytime Hotline. Or if you prefer to shoot us an email, just go to mrmortgageradio.com. That's mrmortgageradio.com. Scroll to the bottom of the page. There you'll find an email icon. If you click on that icon, you can shoot us your email, and she'll get your question that way. But guys, we have a great show lined up for you this week. I've been digging through the data, reading the headlines, screaming at some of them, lining the bottom of a bird cage with others. There's been some interesting news out there. It all started for me on Wednesday when we were looking at the headline, Mortgage Applications Fall to a 28-Year Low, which by all intents and purposes indicates a big slowdown in buying demand, right? But that comes off of a big surge in January. I think we were 8.1% January over December. So yes, we have definitely seen a bit of a pullback, but that's for a couple reasons. One is interest rates moved from the low sixes. And I know the headline 3 weeks ago said, or I guess it's been a month, rates fall into the fives or pull back into the fives. And if you're a listener of the show or you follow us on social media, you know that was all garbage. We called it the Great Rate Head Fake. It lasted for about 7 hours, but that was all the buzz at the end of January was rates were pulling back and we saw a surge in buying activity. But guys, what all this indicates to me is there's still a lot of demand in this market and not enough supply. I know in January there was a slight downtick in new listing inventory coupled with an uptick in sales activity because of that pullback in rates. I don't know. Logic kind of dictates that if rates are pulling back up, demand might slow down. I think the demand that's in the market right now is opportunistic demand. And what I mean by that is if they can find a good deal, or in the case of 30 days ago, lock a rate in the low sixes or high fives, they're going to make that move. You know, they're going to take advantage of the opportunity in the market because all the naysayers for the last 2 years who have been talking about bursting bubbles, they've been wrong. You know, appreciation is slowing for sure, but it's still appreciating in most housing markets. So I'm not discouraged by this. I'm actually encouraged because I think blind demand is a recipe for a disaster. But opportunistic demand, I think, makes a lot of sense for everybody. And guys, we're still locking interest rates, you know, far lower than the average rates by using seller contributions to buy the interest rate down. And if you have questions about that, I'll be happy to walk you through it. But you know, we've used many examples where a seller would be willing to take a slight discount in price, but then we do the math and see that that slight discount in price is better used as a seller contribution and use that contribution for an interest rate buy down. So I'm kind of encouraged by the headlines that the rates moving back into the, you know, upper sixes, meaty part of the sixes, if you will, is slowing demand. I think that's exciting because if you're a smart buyer that's armed with these tactics right now, you can get a rate in the fives, and there is a less crowded playing field if you're negotiating for a property. And guys, sellers are seeing these headlines too. Don't kid yourself. If you're selling, you're concerned that, you know, all of this interest rate talk and slowing activity is going to make it more difficult for you to sell your property. And that could be the case. We are seeing either overpriced properties or properties that are in poor condition and are priced high for that condition. We're seeing them sit on the market a bit longer, but I think there's opportunity still out there right now. And if a rate in the fives is all that it took for people to rush back to the market, guys, call me. I'll walk you through a strategy to get your rates in the fives right now, today. A fixed rate, 30-year, doesn't adjust, doesn't step up. It's a permanent buy down in the fives. We can make that happen. So I look at the news of this week and I look at that mortgage activity falls to 28-year low, and all of that excitement a month ago was just the exuberance of a slightly lower interest rate. If that's all it takes, I can get you that right now. I can show you a path to that. However, I've said it hundreds and hundreds of times. If the interest rate is what you're looking at solely, if that's the only deciding factor in making a move, you're looking at the wrong thing, because you need to pay attention to your budget. And if a 0.5 point move in the interest rate is putting you in or out of the market, you're too close to that dangerous edge, in my opinion. That's my opinion. I don't think rate alone should be the deciding factor. I think if you're renting, you look at your budget, you look at the market and say, okay, at a 6%, at a 5.5%, at a 6.5%, whatever the interest rate of the day is, at the interest rate of the day with the budget that I have, that I'm already paying for rent, what could I afford to buy? And then look at that and say, okay, here is an interesting home. Could I get the seller to help me with a closing cost contribution? Could I utilize an FHA loan and get a lower interest rate to begin with, because FHA loans are priced slightly lower than conventional right now? And guys, if you didn't see the news, the mortgage insurance for FHA was lowered, so your monthly payment is going to be lowered. If you have the same credit score and you're borrowing FHA versus conventional, you're almost always right now saving. If you're borrowing more than 80%, that's the caveat, because now mortgage insurance is part of the equation. FHA suddenly is the more attractive payment. So, and while I'm talking about that, I want to share a story about a young couple, first-time home buyers, who were the perfect FHA candidate, the quintessential FHA candidate. They were putting 5% down, but their agent advise them to go conventional because conventional offers are more attractive to buyers. Guys, that's a load of crap. I've talked about it 100 times. It's a misconception. I can explain the differences to anybody who wants to spend 5 minutes on the phone, and we are successfully day in and day out assisting our clients with FHA offers being accepted because of the additional work on the approval process and the explanation. But my point in this story is, they went conventional. They paid mortgage insurance either way, but they paid a higher interest rate. In this instance, it was 5/8 or 3/4 of a point. I don't remember exactly the swing in the rate, but they came to me after the fact, and we're working with them on a refi strategy for somewhere down the road, because it's not going to happen anytime in the near future. But my point is, we had a conversation. We looked at what they could have done, but they were advised to use a conventional loan because their agent felt that was an easier offer to present. Well, guess what? They're paying more money every month because of that decision. They could have had a rate far lower than the rate that they got, and the mortgage insurance premium, because of their credit score, would have been lower with FHA anyway. So lower rate and lower mortgage insurance, they would have saved a load each month on the payments. But because their agent didn't want to present the FHA approval, guys, if you're hearing that frustrates me to no end. If you're hearing that out there from your agent, you are working with the wrong agent, and we can get you in touch with an agent that will advocate for you for the best possible loan product as well as the best possible property. So call us, text us. I'll get you in touch with a really great agent. But hey, guys, anyway, you hear the music. You know what that means. That is my cue. Sit tight. We'll be back in a few. On the other side of this break, we are going to start diving into your questions. They are my favorite part of the show. I hope you enjoy it too. If you have questions or comments, shoot them over to us at 855-462-7292. We will be back after this short commercial break. Hey, it's mark-eitel, host of the Mr. Mortgage Show, and I'm going to interrupt this commercial break to ask you for a favor. If you have any friends or family or coworkers who are thinking of buying or selling or refinancing real estate, I'm hoping I can count on you to introduce them to me, to the team, to the show. We'd love to help them any way we can. Just simply share the link, MrMortgageRadio.com, MrMortgageRadio.com. Again, it's mark-eitel, NMLS 1929005. Now, back to the commercials. Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Hey, it's mark-eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is mark-eitel, and you are listening to the Mr. Mortgage Show, and you are in the right place if you want the data, the tips, the tricks, the strategies, all the info that you need and the answers to your questions so you can go out there and make better real estate and mortgage decisions for you and your family. We do this each week right here, same time, same station. I am joined, as always, by my lovely producer, Jen. She is womaning the Anytime Hotline. That number is 855-462-7292. That's 855-462-7292. Just give us a call or shoot us a text. She'll get your questions on the air. Or via email by visiting MrMortgageRadio.com. That's MrMortgageRadio.com. Scroll to the bottom of the page, click that email icon, and you can shoot your questions to us that way. But hey, I went on a rant on that opening segment, mainly around the FHA borrower. And man, that really works me up because I hate anybody being discriminated against when it comes to the opportunity to buy a house. That whole misconception about FHA gets me worked up. But hey, I want to check in with Jen. I see you're busy on the phone already. What's going on back there?
We have a lot of questions this week. The natives are definitely restless.
I got everybody wound up, right? Because I feel a little restless too. But I think all of the news around real estate and mortgage in particular this week just got everybody super confused all over again. And it kind of felt like we were, at least everybody had an understanding of what was going on. And then, here comes all the confusion once more. But anyway, I don't want to beat that drum any longer. If you've got questions about that, just give me a call. But as I mentioned, there are still loads of opportunity out there and strategies to get that desirable interest rate fixed for 30 years, no step-ups. I mean, those are available too. I'm just weighing one against the other. I like the security of that long-term fixed rate mortgage. I don't want to go off on that unless you have questions around it, but I'm going to throw it over to Jen and see if we can't get your very first question on the air. Hey, Jen, are you ready? Okay, what do we have?
Sherman is asking, what is the difference between discount points and origination points? Do we have to pay them both, or are they negotiable? Thank you.
Hey, Sherman, thanks for that, brother. That's a very well-timed question because I was kind of alluding to that when I mentioned you can get that great interest rate, right? So discount points are one of the ways to do that. But before we dive into that, they're really both the same thing. So a point is 1% of the loan amount. and it's a fee. It can be called an origination point. It can be called a discount point. But think about it this way. So a lender can make money by charging fees to originate the mortgage, or they can get paid in the interest rate. So usually a discount point is used to buy the rate down. So you're taking some of that profit out of the rate that the lender would normally realize, and you're paying it upfront in the form of a fee, which is super desirable if you're using a seller contribution to buy down the interest rate, because that's not money coming out of your pocket, but you're realizing that savings every month. So that's typically what you'll hear the term discount point alluding to. But an origination point is basically the same thing. It's that 1% of the loan as a fee being paid up front, and usually in exchange for a more favorable rate. So you could pay the points or negotiate the points away. Almost everything in a transaction is negotiable. But if you've listened to the show in the past, you might have heard me use that balloon analogy. And if you haven't, I'm going to go ahead and share that again, because I think this makes sense, especially because of Sherman's question. So many, many years ago, there was a car dealer called CarMax, and they may still be around in some markets, but this was the most brilliant visual demonstration of, fees versus costs that I had ever seen. And I might make a video and post it to social media, because it's still, as far as a visual reference of explaining this, it's the best one that I can think of. But those long, narrow balloons that they make balloon animals out of? So they had a slightly larger one of those, and on one end of the balloon was written fees, and on the other end was written price. Now, for this example, you would change the word price to interest rate, and maybe fees to points. But if you squeeze down on the end that says interest rates, the fee side or the point side gets larger. And if you squeeze the fees down, the interest rate would get larger. And that is the best way I can describe it, because oftentimes we get hung up on the lowest possible interest rate. Well, guys, you can get a rate in the 2s or 3s today, depending on the loan program, but you're going to pay a load of fees to buy it, because that discount point, if you will, points in that instance, that's, as I mentioned, the profit that the lender would realize from collecting that interest over the projected life of that loan. They're now offsetting that by charging some of that up front. So the lowest interest rate is not always the cheapest option. So there's always a sweet spot. Do I pay a point for a lower rate? Do I pay 2 points for a much lower rate? Do I use a seller contribution and buy the rate down significantly? All of these are to be considered in that, fee versus interest rate equation when you're squeezing on that balloon. So, Sherman, I'm happy to walk you through the details. It sounds like you may have already engaged with another lender. If you have, I can still be a second set of eyes on a document for you and maybe answer some questions. If you haven't engaged with a lender, I'd love the opportunity to help you. Guys, if you can hear my voice, we could be your choice. We are part of a national team, so we can serve all markets everywhere except New York. Sorry, Big Apple. I think I might buy the domain anywhere but New York, because I find myself saying that so often. But hey, Sherman, that was a brilliant, brilliant question. And guys, if anybody has questions about that, because it gets super confusing, especially when you're looking at these rate ads that you see online, and it seems unrealistic, right? I saw one the other day that was an interest rate in the 4s. And it got super exciting when you open this ad. I think it was on Facebook. But if you read the fine print underneath it, it was a 15-year loan with 2 discount points. So there's always more to the story, right, than just rate. And I kind of said it in the opening segment. If you're just looking at rate alone and that's what you're making your decision on, you're not well informed. That's not enough data to make a decision. So I hope that helps. I got a little long-winded there because that's the best way I can explain it, is that silly balloon squeezing the end of the balloon example, but it makes sense to me. And you've heard me say it before. Everything for me is a visual reference, so that's the best way I can retain something. So I always try to share that visual reference. But hey, Sherman, thank you so much for your question, brother. Again, I hope that helped. If you need more information or you want to dive a little bit deeper, you can always give us a call or shoot us a text, 855-462-7292 or MrMortgageRadio.com. But hey, guys, you hear the music. You know what that means? That is my cue. We'll be back in a few. Sit tight for this short commercial break. On the other side of this break, we're going to dive into more of your questions. Hey, it's Mark-eitel, host of the Mr. Mortgage Show, and I'm going to interrupt this commercial break to ask you for a favor. If you have any friends or family or coworkers who are thinking of buying or selling or refinancing real estate, I'm hoping I can count on you to introduce them to me, to the team, to the show. We'd love to help them any way we can. Just simply share the link, MrMortgageRadio.com, MrMortgageRadio.com. Again, it's Mark-eitel, NMLS 1929005. Now, back to the commercials. Hey, it's Mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the REC loan he advertises. Long story short, we did a REC refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
Hey, it's Mark-eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark-eitel, and you are locked and loaded right here on the Mr. Mortgage Show. We do this each week. We're right here, same bat time, same bat station, and super excited to be with you. Thank you guys so much for choosing to spend a little bit of your day with us. We hope you walk away with the info that you need so you can be better informed and make better real estate and mortgage decisions for you and your family. And hey, if nothing else, you could probably win a beer at the VFW with some trivia, because a lot of our listeners ask really, really great questions, and most of the time you're going to have information that the other people just don't have. So anyway, you hear me weeing all the way down the road. That's because I am joined by Jen, my producer, and she is womanning the Anytime Hotline. That number is 855-462-7292. That's 855-462-7292. You can call or text your questions to that number. She'll get you on the air. If you prefer to do it via email, just check out MrMortgageRadio.com. That's MrMortgageRadio.com, and scroll to the bottom of the page. Click that email icon, type in your questions, hit send, and she'll get you on the air. But speaking of Jen and your questions, let me throw it over to Jen, and we'll get some more questions on the air. Hey, Jen, you ready?
Maggie wants to know, my student loan payments are deferred, but my bank is telling me they still count against me. Is this true? Is there any way around this? Should I just wait until the loans are forgiven?
Hey, that was Maggie. Okay, Maggie, yeah, so you are not alone in this, right? Because student loans were deferred through the pandemic, and I believe, I might be wrong, but I kind of lost track of all of this. I believe that deferment was even extended. So a lot of people have student loans that they're not required to make payments on. But here's the thing, in the world of underwriting, that deferment is not indefinite. This whole pandemic thing was a very new and unique experience. So depending on the loan program, the underwriter is required to take your student loan balance and either, depending on the program, because they vary, they're going to either apply 0.5% or 1% of that loan balance as a required payment. So if you've got $130,000 in student loans, depending on the program, you could be hit as hard as $1,300 a month in calculating your debt to income. And that's where a lot of people get hurt by this deferment, right? So it's interesting because I get it. There are also a lot of people waiting around for the final decision on the forgiveness. So you don't want to make payments if it's ultimately going to be forgiven anyway. So I get it. I get where you're coming from. But to answer your question, yes, it is an underwriting guideline. It's required that they calculate something in that payment column if you're deferred. Now, here is the workaround. There is a program called income-based repayment, IBR, not irritable bowel syndrome, although it might give you irritable bowel syndrome, but IBR is income-based repayment. And you can call your servicer and you disclose your income, and they'll say, based on your income, this is your new required payment. And it's surprisingly low in a lot of instances. Most recently, we had a borrower with the same exact scenario. Student loan in deferment, payment would have been around $800 a month. Income-based repayment was under $100 a month. So we use the income-based repayment plan as far as calculating the debt-to-income ratio. They were approved, and they're hopeful that their debt will ultimately be forgiven anyway. But income-based repayment is the strategy that might make this work for you. We know waiting often is not the best answer. And in this case, waiting might not even get the result that you're looking for. So anyway, that was a great question. I hope that answer helps. As always, if you need more info, you can reach out and I'll walk you through the IBR strategy. And if you need help with a mortgage application, we can do that too. But it sounds like you're already engaged with your bank and maybe they are just unaware of the IBR guideline. But hey, thanks for that question. Jen, can we get another one in?
Doug sent this one. I'm a U.S. Army veteran and on full disability. I receive Social Security and disability. Is it possible for me to get a mortgage?
Hey, brother, thank you for that question. And first, I'd like to thank you for your service. And secondly, I'd like to say yes, that you can use your disability and your Social Security income to qualify. You can still use your VA entitlement, assuming that you have it. And you mentioned that you have full disability. So there is a chance, and this all depends on the disability level. It has to be confirmed, but you may be able to utilize your VA loan and get your funding fee waived. And there could be significant tax savings for a disabled vet as far as the real estate taxes are concerned. So I know that the circumstances that you find yourself in aren't the most pleasant, but some of this could work in your favor as far as qualifying for the loan. And then obviously the funding fee waiver and then the lower real estate taxes could all play in your favor. So I would love to walk you through that. If you need more info, you can feel free to reach out and I'll be happy to walk you through that myself. But again, I appreciate your question. Thank you for that one. Hey, Jen, do we have time to squeeze in another question?
Troy has this question. I was reading online about a 100% FHA loan. Can you explain how this works? Is this something you can help us with?
Hey, Troy. Yes, that is something I can help you with. And how it works is it's not a 100% FHA loan. It's a little bit confusing. I know a lot of people are running around out there on social media calling it that, but essentially you can get 100% of the purchase price. But how it works is the 3.5% down payment that's required by the FHA, the minimum down payment, is a grant. You'll get a grant for 3.5%. It doesn't accrue interest. It doesn't require repayment. So it's basically like a gift. And then your 96.5% loan gets you to 100% of the purchase price. You can still have a seller contribute to help with closing costs, but you will want to make sure that you have enough capital for closing costs. And keep in mind that you can use a seller contribution to help with that too, but there may be a little out of pocket. But assuming that you can get a full contribution from the seller and qualify for that FHA program with the grant, you're home free at 100%. So that, my man, is a great question. There is a lot of conversation online about that. And it's not specific to geographic location like a USDA loan. So suddenly that opens up a greater opportunity for people who might have the income, might have the credit, and just lacking that down payment piece. And they might not qualify for one of the regional down payment assistance programs. This is another option. So brilliant question, my man. I appreciate that. And I hope that helps. And I guess let me say this, since we're on this topic, and we started the show by talking about finding the opportunity in the market, right? Regardless of home price, regardless of interest rate. I mean, we did it a few episodes ago. We went back to 1940 and took 10-year jumps, 1940 to 50, 50 to 60, all the way to 2020, and never found a 10-year cycle where real estate lost value. So in all of that, there were high rates, low rates, recessions, great economies, bad economies, Republicans, Democrats, wars, and real estate just finds its way through all of those markets. So yeah, thank you for that question. You are finding opportunity in the market, and that's where I was going with that. So I appreciate that question, my man. And again, reach out if you need more information. We are always here and happy to help. But hey guys, you hear the music? You know what that means? That is my cue. Sit tight. We will be back in a few on the other side of this short commercial break. We're going to take more of your questions, and we'll be back with more of the show. Hey, it's mark-eitel, host of the Mr. Mortgage Show, and I'm going to interrupt this commercial break to ask you for a favor. If you have any friends or family or coworkers who are thinking of buying or selling or refinancing real estate, I'm hoping I can count on you to introduce them to me, to the team, to the show. We'd love to help them any way we can. Just simply share the link, MrMortgageRadio.com, MrMortgageRadio.com. Again, it's mark-eitel, NMLS 1929005. Now, back to the commercials. Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to mark-eitel and the Mr. Mortgage team.
Hey, it's mark-eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right. My name is Mark-eitel, and you are listening to the Mr. Mortgage Show. And friends, you're in the right place if you want the data, the information, the tips, the tricks, the strategies, and all the information that you need so you can go out there and make better real estate and mortgage decisions for you and your family. Hey, thanks so much for choosing to spend a little bit of your day with us. We are going to do our very best to answer all your questions. And if you have questions or comments, feel free to call or text 855-462-7292. That's 855-462-7292. Jen is standing by and we'll manning that anytime hotline. She'll get your questions on the air. If you prefer to send us an email, just do that by visiting mrmortgageradio.com. That's mrmortgageradio.com. Scroll to the bottom of the page. You'll find an email icon there. If you click on that icon, you can shoot your questions and comments over to us via email. So anyway, speaking of Jen and your questions, I am going to toss the mic her way and see if we can't get another question on the air. Hey, Jen, what do we have?
Vicky sent this one. Are there any loans for buying a fixer-upper? This will be our home, but it seems like buying a house that needs work may make sense.
Hey, Vicky, that is a great question. And yes, there are several loan programs that are available. Conventional loans, VA loans, USDA, and FHA. I think all of them have. Actually, yes, they all have a renovation loan product available under those guidelines. So the easy answer is yes. Now, we're going to have to dive in and discuss things like what the renovations are going to entail, because some of the programs limit how much or what renovations you can actually do. Some are far more liberal and actually allow you to demolish and rebuild the house. So there are many, many loan programs. And let me say this. Congratulations on reading past the headlines. I say it all the time. Go past the headlines, dig into the data, and find the opportunity in the market. And one place right now there is opportunity in the market are for homes that need some updating or some renovation, because they're the ugly ducklings, and you can pick them up, polish them up, and turn them into your dream home. So I think that's a great place to look for opportunities right now. Perhaps properties that need a little work are getting overlooked. So brilliant strategy. I would welcome the opportunity to help you if you haven't engaged with a lender yet, or if you just have some questions, feel free to give us a shout. 855-462-7292. But hey, Jen, do we have another question?
Sam sent this text. If an unmarried couple buys a house and later breaks up, how hard is it to take one person off of the mortgage?
Hey, Sam, is there something you need to talk to your girlfriend about, or are you just trying to plan for every possible scenario? There's not an easy way to do it, and we talk about this a lot, and we see this a lot. The only way to do it is to refinance it into the person who chooses to keep the property into their name. So it's not as simple as taking somebody off the mortgage. There's a huge misconception about that, because you can add or remove somebody from the deed quite easily. There's an instrument called a quit, Q-U-I-T, quit claim deed. And the quit claim deed will allow you to add another owner or remove an owner from the deed or the title of the property. But that doesn't work with a mortgage, because you were both underwritten for income, both underwritten for credit. You're both on the hook for the mortgage. And fun fact, guys, if two people are on the mortgage and two people are on the deed, and then you do the quit claim deed and take one of them off the ownership instrument, right, the title or deed to the property, they're both still on the mortgage. And we see that oftentimes even in divorce scenarios. People think that they're just going to quit claim one person off the property and the mortgage. It just doesn't work that way. So, Sam, to answer your question, my man, the only way to do it is if she's going to keep the property, she would have to refi it into her name, cash you out, and the new mortgage and deed would be in her name solely. And if the roles are reversed, it would be you that was initiating that refi. So hopefully that helps. And if you've got more questions about that, just give me a call. I'll be happy to walk you through it. But I appreciate your question, my man, and good luck. Hopefully relationship is not on the rocks, brother. But thank you for your question. Hey, Jen, okay?
Cynthia sent us this one. My dad has offered to sell me his house for the same amount he owes. Can he add me to the title so I can refinance it into my name only?
Hey, Cynthia, that is a great question. And the easiest way to do that would probably be just to buy it from your dad with a gift of equity. So let's say the property's worth $300,000 and let's say he owes $150,000 on the property. You could buy it from him and he could gift you everything you would need as far as the equity position, so you wouldn't have to put a down payment down. He could even gift you the money for the closing costs, the equity for the closing costs, because he is allowed to gift for closing costs as well. So I would think that the gift of equity purchase strategy would be the easier path to go and accomplish what you're trying to accomplish. So I'm happy to walk you through that if you need more info. But yeah, hopefully that helps. I'm thinking purchase from your dad with a gift of equity, and the property would be in your name solely, as would the loan. So anyway, I hope that helps. And as always, if you need more info, please feel free to reach out. So we see that quite often, guys. It's not an uncommon scenario. We see that a lot. You know, ultimately the parents want the property to end up with the child, but they're not ready to move into assisted living, or they may need some additional money. So selling it to them with that gift of equity strategy might be the answer. I've seen it work on many occasions where it's just no money to mom and dad and the property ends up in the child's name. Or in the most recent case, mom did need some money to go buy a condo, but she didn't need all the equity. So she sold the property at a price that allowed her to cash out enough equity to go buy a small condo free and clear. And the children bought the property. It was a son and daughter-in-law bought the property with the gift of equity strategy. They put no money down, took no money out of pocket, and bought mom's house. Mom had enough cash to go buy the condo, and they are still living happily ever after right now. So that strategy works really well, and in this instance, it might be the cleanest way to accomplish your goals, but I'm always open to diving deeper if you need more information about that. But I greatly appreciate the question. And as always, if you need more information, don't hesitate to call us. 855-462-7292 is the way to get us. That's the Anytime Hotline. Hey, that's perfect timing. Did you hear the music? That means it is time to take a break. That's my cue. We'll be back in a few. Sit tight. On the other side of this commercial break, we're going to dive into more of your questions and dive into more of the data. So we will be right back on the other side of this commercial break with more of the Mr. Mortgage Show. Hey, it's Mark-eitel, host of the Mr. Mortgage Show, and I'm going to interrupt this commercial break to ask you for a favor. If you have any friends or family or coworkers who are thinking of buying or selling or refinancing real estate, I'm hoping I can count on you to introduce them to me, to the team, to the show. We'd love to help them any way we can. Just simply share the link, MrMortgageRadio.com, MrMortgageRadio.com. Again, it's Mark-eitel, NMLS 1929005. Now, back to the commercials. Hey, it's Mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant files our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark-eitel, and you are listening to the Mr. Mortgage Show. And you heard the man. You can give us a call or shoot us a text to 855-462-7292. That's 855-462-7292. That is the Anytime Hotline. And Jen is womanning that hotline. She'll get your questions on the air. That number, one more time, is 855-462-7292. You can call or text your questions or comments over to us that way. If you prefer to send us an email, just visit mrmortgageradio.com. That's mrmortgageradio.com. Scroll to the bottom of the page, click the email icon, and there you'll be able to shoot your questions over via email. But speaking of Jen and speaking of your questions, first let me say thanks to everybody who shot us over a question so far today. We've had some really, really great questions, and I appreciate that. Without your participation, this is far less fun for me. So thank you for your questions. And I know Jen's got a few more all ready to go. So, hey, Jen, what do we have?
Charlie is asking, my wife and I want to buy a motel in Virginia. We will also live on the property. Can we get a regular mortgage, or will this require a special loan? We can put up to 20% down if necessary. Can your company help with this?
Hey, Charlie. All right, everybody, ready? Hotel, motel, Holiday Inn. It shows you how old I am. That's probably one of the first rap songs I remember. But hey, congratulations, Charlie. This sounds like a really, really cool opportunity. And many, many years ago, I met a couple who went to Key West for their honeymoon, fell in love with it, ended up buying a bed and breakfast down there, and ultimately opened a restaurant. And still today, they're down there living the dream life on the beach and running a successful restaurant and bed and breakfast. So super cool opportunity. I'm excited for you. But to answer your question, this is not going to be a regular mortgage. But good news here, my man. This sounds like it might be the candidate for an SBA 504 loan. This might be the right scenario. And that's a great loan program. A 20-year term, as little as 10% down payment. Oftentimes you can finance some of the renovation or upgrade costs. You can live on the property. So super, super cool opportunity. And SBA is a wonderful, wonderful loan product, if you will. There's a variety of SBA loans, but my mind jumps to the 504. Could be a 7, but I'm thinking 504 might be the loan program for you. And to answer your question, yes, we can help with that. We've done several in the past. The most recent one was to help a manufacturer acquire a facility, and they bought the facility, gutted it to the shell, renovated the entire thing. It took them a year to do the project, and they moved in there with that 20-year loan and haven't looked back. They've got an amazing facility, and the rate and term was far more favorable than a traditional commercial mortgage. So I'm thinking that you might fall into that same category, and I welcome the opportunity to talk to you more about it. So just reach out to us. I think we have your information from your question. I'll shoot you over an email and see if we can't set up a time to talk. But hey, Charlie, congrats on that opportunity, and I appreciate you shooting us over the question. Thank you, sir. Hey, Jen, what else do we have?
Clark sent this one. I'm a long-haul truck driver, and I've basically lived in my truck and with friends for the last few years. Is me not having rental history going to be a problem?
Hey, Clark, that is an interesting question. So no, usually it's not going to be an issue. What I'm curious though, where are you getting your mail? You know, what address is on your all of your documentation for your truck, for your driver's license? There might be a residential address in there somewhere that you would be able to use in the application, but rental history in and of itself should not be a problem. There are loan programs that will work through that. So, and this is a super interesting question, but not the first time I've heard it. It's probably been about a year, but we did a mortgage for a woman down in Florida who was, second chapter in life, if you will. She had her CDL early in life, and man, I'm smiling now because this was a pretty cool woman, and you're bringing all of this back to the front of my mind with this question. But the divorce was hard on her, and she just wanted a fresh start. So she, as I mentioned, had past experience with CDL, and she started long haul driving, and she did probably 6 months during the pandemic. And lived in her truck. And she said it was the most enjoyable and therapeutic time of her life because she had nobody to argue with but herself. And she thought through a lot of things and spent that time on the road. And she would just sleep in the cab at the truck stops. And she was constantly keeping those wheels turning because she wasn't running from something. She was running to figure herself out. And I just thought it was a cool story. So this is not the first time that we've been faced with that. And it did work out for her. She was able to buy a property and, start over. She's still driving. She's just not on the road as much as she was during that period of time. So anyway, thank you for the walk down memory lane. I got a big smile on my face thinking of her. And when we get off the air, I might shoot her an email just to check in on her and see how she's doing. But I appreciate that, brother. If you need help with that, give us a shout. But I wouldn't let that deter you. If you're ready to put some roots down somewhere, I'd be happy to help you if you need help. But if nothing else, call us if you have questions. I'll do my best to walk you through it. But I appreciate that. Thank you, sir. Hey, Jen, do we have another question?
Patricia has a question. I'm going to call your office to do a refinance, but I'm curious to know how much debt we can pay off in the refi. Is there a limit?
Hey, that's a great question. So I'm guessing what you're asking is, as a percentage of the value, is there a limit? So normally with a debt consolidation or cash out refinance, even with the rec refi that we advertise and we do so much of, you're normally going to be looking at 80% of the value of the property is where the new loan amount is going to cap. And then whatever is left between that 80% and paying off the current mortgage and equity line, if there is one, you'll be able to use all of that to pay off your debt. And the cool thing about the rec refi or any debt consolidation refi for that matter, but I'm a big fan of our rec refi, and rec is REC. It stands for reduce, eliminate, and consolidate. If we can reduce, eliminate, or consolidate your debt, you're going to meet the initial requirements to be underwritten for rec. But anyway, where I'm going with this is, let's say your debt to income ratio is too high. You have too much debt to qualify for that higher loan amount. Well, the cool thing with the debt consolidation strategy, be it a rec refi or a regular debt consolidation, is that by paying off those, let's say, credit cards and car payments, right? Those are no longer counted against you. The caveat is they're paid at the closing table, right? So when your loan closes, one check is going to go to Amex, one is going to go to Ford Motor Credit or whoever your creditors are. But the cool thing is that if your debt to income ratio is too high to get you approved because of those debts that are being paid off, they can be removed from that calculation as long as we can pay them at the closing table. So, but to answer your question, if I understood it correctly, I would use that 80% threshold. So I hope that helps. If you have more questions or you need more information, as always, do not hesitate to give us a call. We are always here and happy to help. So I appreciate that question. But anyway, let's see if we can squeeze in one more question. What do we have, Jen?
Raymond sent this one. My brother and I are thinking of buying a vacation house together. His credit isn't great. Can we just use my credit, but us both be on the loan?
Hey, that's an easy question. No. No. And the reason I say that is, if you can't use his credit, you can't use his income. And if you can't use his credit, you can't put him on the loan. But you're going to own all of the debt and he's going to own a percentage of the property. So, but brilliant question. I would caution you not to jump to conclusions, though, because you might find that there is a program that he can be underwritten to, even with, not perfect credit. So that was a great question. I hope that helps. Hey, you hear the music? You know what that means? My gosh, where is the time gone? We have wrapped up another week of the Mr. Mortgage Show. Man, I hope you had as much fun as I did. Hey, if you need us during the week, just call us, text us, email us. Strap a message to a pigeon and send them our way. 855-462-7292, 855-462-7292, or MrMortgageRadio.com. That's MrMortgageRadio.com. Hey, Jen is on the phone. She's tied up. She can't say goodbye, but I can. Hey, have a fantastic week. Jen and I will be back next week right here. Same time, same station. Have a great week.
That's a wrap. Join Mark Eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show, and I'm going to interrupt this commercial break to ask you for a favor. If you have any friends or family or coworkers who are thinking of buying or selling or refinancing real estate, I'm hoping I can count on you to introduce them to me, to the team, to the show. We'd love to help them any way we can. Just simply share the link, MrMortgageRadio.com, MrMortgageRadio.com. Again, it's Mark Eitel, NMLS 1929005. Now, back to the commercials.